Once again, good afternoon. I'm back to proceed with our series on process costing. And today we are going to be looking at how we can do the process costing when we have losses. And we are going to kick off. But what I want you to know is that when the process is taking place, we expect that the quantity of the input or the units we are putting in the system, we expect that when the output comes out, we expect that some of those, the quantity we've put in will not come out exactly like in the same kilos or same amount, like the same way we put in. We expect that there are some normal losses that are going to happen, even if the management has done each and everything and they have put in measures that can control losses to happen. We expect that there are some losses that happen in the production. What happens is that if there are those losses, we expect that we are going to be incurring those losses in form of wastages or wastes and in form of the scrap values or the scrap units. It means when they are just wastes, we expect that those are the costs, those are the portions of raw materials that are going to be lost in the production and we cannot recover anything from them. Those wastes that were when the production takes place, we don't expect to earn anything from them. One of them will have these gases, smokes, fumes, and others. Like we can use a certain example. If let's say you are engaged in coffee, let's say coffee drying, we expect that when you are plucking that coffee, you find it's a bit heavy. If you try to measure the coffee when you have just plucked it from the plantation, you find that you'll be having more sacks. But as they go through the process of drying, you find that that coffee is going to be losing value. It loses value in form of evaporation and others. What happens is that when the process of drying is done, we expect that the quantity or the amount we put in before those coffee were disposed to sunshine, we expect that the quantity was high, but when they have dried, we expect that the quantity is going to be low because there are some normal losses that have happened, and those came as a result of evaporation and chemical reaction. Of course, some substances, they react differently on certain conditions, the natural conditions within the items themselves. So when these items lose the value, we expect that there are certain things we are not going to be earning anything. But at the end of the day, when these coffee seeds, when they are dry, we expect that we are going to take them to the grinding machine and they remove these coffee husks. They remove those husks, and when they go for that, for those milling machines, we expect that even the quantity we've taken, it will not come out exactly like the way we took it. It will change, but from there we shall get now the husks. We get the coffee seeds themselves, then we have the husks themselves. Now those husks, for them, they are the ones we call the scrap units. At least for those ones, we can be able to sell them because there are other farms that can use that as their input, like in poultry, People can buy those ones and they put them in their gardens as fertilizers. So when you see that you are remaining with some residual materials which you can sell, then we call those ones, they are called scrap. They are called scraps. So when you sell them, they are called, the value we get will be the scrap value, but that came as a result of a loss because the total quantity was a bit much, and when they went through the milling machine, we got less quantities and we lost some of the materials. So that's how basically I can explain that. But as we know that these wastages or the wastes, for them we don't earn anything. It's like the smoke that is coming from those milling machine. You just find that on the top of the roof of where the milling machine is installed, you find that there is a lot of dust there, there is a lot of smoke and everything. So to some instances, you may find that you have even to incur an extra cost to clean those roofs so that to remove that smoke. So we are saying that the wastes, for them, we get nothing from them. What we only earn as in a loss, it is those scrapped units. They are the ones we sell and we can raise something. Then we can go to the computations. If at all you've understood that, we are saying that because of the activities carried out at different processes during transformation process, remember we have put in our raw materials and we have put in other conventional costs that are going to convert those raw materials into finished goods. And we are saying losses are bound to happen or to take place. Whatever quality control adapted or other methods that you may use to make sure that you improve the quality, there are certain losses, as I said, that are going to happen, and they will happen in form of wastages or scraps. And we are saying a waste, this is the portion of the raw materials that is lost in processing or in the production process and has no recovery value. There is nothing we can get from that waste. And we are saying material is lost through evaporation, and sometimes residues may be there with no value, like the gases, as I said, the dust, you know, that dust, as I told you, the one which when you just enter like the sawmill, you just find there is dust on the roofs of the building where those milling machines are installed. The smoke, by the time you just reach to the press, you find that the press is smelling. So those are the wastes we are talking about. And we are saying sometimes wastes can attract a cost in the process of disposing it off. If let's say they are just, the press is smelling, you may incur certain costs to remove some of those materials that caused the smell. So that's what we are talking about in terms of the wastes. But remember, those wastes came as a result of the production process that is taking place, or by the introduction of the inputs that we put in so that we can get the raw materials. Then we have the scraps. These scraps, these are residues of materials from certain manufacturing operations that has a relatively minor recovery value. When you are talking about the minor recovery value, it means that you cannot necessarily get what you've put in. If let's say you've bought the inputs, let's say 10,000, you will not, when you're selling those residues, you will not sell them at the exact cost at which you bought the other inputs. You may find that you are going to be getting 500 per unit of those residues, and you have the sawdusts. You know those, I know most of you guys, you must have attended secondary schools or primary schools where they use those sawdusts, those within the the carpenter workshops, those dusts for them, those particles that are removed by the machines from those woods that are used for cooking food. We used to see those things that we are being used at schools when they are cooking, and in other factories, like these factories which are making bread and others, they do use those ones. So at least if you have a recovery value, if let's say you've bought number of woods and they have removed what they want, these remaining particles, you can use them and do other things. Or some people can buy it as their raw materials for further production. A lively example you can get is like these sugar manufacturing farms. When they get the sugar particles, then those remains, they can use them to do other businesses. They can give to those who are engaged in agriculture so that they take it as fertilizers. They can give it to fertilizer manufacturers so that they can mix it with other ingredients so that they can make fertilizers. So that's what we mean by that. And we are saying process loss represents a shortfall in input because the final output cannot match the input where there is a loss. If we incur a loss, if let's say we're putting 10,000 units and we get the actual production to be 9,000 units, we expect that the 1,000 becomes our loss. But we have also to know, is it a normal loss or it is part of the abnormal loss we've incurred? So you have to be careful, but remember, these normal losses, they are part of the production. They form part of the production cost, because when you are computing for the value of the unit cost, you find that you are getting the total cost minus the scrapped values, and you divide by the expected units. It means normal losses, for them, they affect, or they are included within the cost of production, but these other abnormal losses, they are not included, because to get those abnormal losses, we already know our selling price, because abnormal losses, they are not included when you are computing for the unit cost. Hope you can be able to get that, and we can proceed and talk about the normal loss, the normal process losses. And we are saying these losses represent inevitable losses that may occur at any stage. As the word suggests, they are inevitable. So they come when you have no control about them. And we are saying normal losses are uncontrollable and expected to take place under normal working conditions. And such losses are always provided for at the start of the period. What this statement means is that when you are starting the production, we give you the percentage that you are going to use, that we expect that the normal loss is going to be, let's say, 5% of the input, or it is 10% of the input. So when we assume that, we expect that you are going to be getting those normal losses. If those normal losses have a sellable value, or you can sell them as in terms of the scraps, and we can sell them, we get the scrap values and we less it from the total cost. And lessing it the total cost, it means we are going to be crediting it to our process account. Crediting to the process account, it means we are lessing it from our total cost of production in that process. We are saying such losses are always provided for at the start of the process, and cost of normal loss constitutes the cost of production. This is what I've been telling you, that it is part, because we expect it to happen. It is inevitable. We can't run business without expecting to incur that loss. Then the logic of this lie in the fact that such losses are one of a normal cost of production and therefore charged to whatever production that emerges. And they are caused by the factors that are beyond the control of the management. Here, what we mean is that even the management cannot control these factors when they are likely to happen. We expect that, as I told you, some of these, they are just in the nature of the materials themselves. If we use the materials that are more likely to react to the natural conditions, there is a chemical reaction, we expect either the material to lose value. As you know, if let's say someone is using, if let's say these brewing industries, you find that they are using carbon dioxide, but the way they pack that carbon dioxide, because whenever it is exposed to different conditions, we expect that it is going to react. And when it is reacting, we are contaminating it. That's why we find that when they are carrying, when you are taking the cylinders of carbon dioxide, you find them that they are well protected from the natural conditions. So if they don't do so, they will just get contaminated and we lose some of the components. The other thing we said, it is evaporation. I told you that if let's say you are drying coffee, when you're drying coffee, we expect that when it is in its raw form, it is a bit heavy. But as time goes on, it dries up and you find that something which was heavy, it is becoming light because it has been exposed to sunshine and the water that was inside has evaporated. So that is the kind of the loss we are talking about. So what we can look at now, we can see the accounting treatment. How do we treat this? We are saying when normal loss is represented by scrap, that's if those units can be sold, which has a realizable value, we expect that the process account is going to be created with the amount realized or received on the sale, thus reducing the process costs. And finally, the corresponding entry, we take it to the normal loss account. What the double entry is, we debit the normal loss account, then we credit the process account. The reason why we are creating the process account is because we are recognizing that the cost we've incurred in the production should reduce as a result of the loss we've incurred. As you know that always a normal loss, we treat that as an expense in the income statement. So we treat that process account as if it is an income statement where you can be able to adjust everything. So allow me stop here for today, and our next video is going to be about the abnormal losses and the abnormal gains. I don't want to mix them here because when I mix, you will get confused. Since we have the double entries and whatever the accounting treatment, let me handle each of them separately. Thank you for watching. You can subscribe once you get to know more and more as you see, you go through your CPA journey. Thank you.